Welcome to today's live strategy session. Great to have you with me. Thank you for coming along. Plenty of interesting things to talk about today. We've got all-time highs in the ASX. We've got gold breaking up to new highs. So a few interesting things to go through, a couple of interesting stocks to have a look at as well. As always, everything today is general commentary only, no personal advice given. Having said all that, I think we should just get straight into that first chart. So let's have a look at the ASX 200. And it has been, look, we had a brief pause last week, and then over the last 3 days, we've had a sequence of new all-time highs. The past 2 months really have been a story of the dips being bought, and we can see that each time the ASX 200 has come back to this 50-day moving average. So as always, I've got that 50-day and the 100-day moving averages, and we can see the pullbacks back to 50-day moving average, supports come in, and the markets rallied again. That's the accumulation, I think, the accumulation on the dips that underpins a rising market. And what's been interesting is that the pullbacks have generally been getting shallower since that first significant pullback in early January. So you look at the January pullback, it was a 4% pullback over 12 days. Then we had a 3% pullback over 7 days. The next one, I think, was about a 2% pullback, only took 3 days. And we look at where we are just recently in the last week or so, and it's less than 1%, and it's only taken a couple of days before these new all-time highs. And I think even more interesting is what's going on over in the mid caps and the small caps. I'll come back to that a little bit later, because that's a really interesting thing that's going on there. But the scenario that we've been discussing, I guess over the last couple of weeks in particular, has been of the possibility of an acceleration if the market could clear this overhead resistance, and that appears to be what's happening now. I think our base case really should be that we're looking for higher levels. And just looking at the ASX 200, just compressing this a little bit, and looking at the range the ASX 200 has been in, and we've looked at this many times over the previous months. I think what's important to take in now is that it is breaking from this range, and the range goes all the way back to August 2021. Now that's about 2.5 years. That's a lot of time trading in the. I say sideways now, but at the time it didn't always feel like sideways. This was quite a significant downward period. But when you can step back and look at the price action from a distance, this is what we call a sideways period. And the thing to remember with these sideways periods is that when they break, they often lead to big trends. And of course, nothing's certain. Nothing is ever certain in the stock market. I've seen many breaks. You get a break, it looks great, and then it fails. But we can always manage that risk. That risk is manageable when we've got strategies like stop losses or trailing stops. So you can take on position, you can take on risk, and if it's not working, you can back out and you protect most of your capital. But if the market runs and you sit back and you fade the break and you go, well, look, I don't know whether I trust this break, and it keeps going, well, if you're not in, well, that's when we miss out. So this is a thing. I think it's really important, and I keep emphasizing this because of the importance of how big this range has been, and we're getting the breakout. So I think the appropriate course of action is to go at the breakout, see where it goes. If it fails, it fails. We use risk management, we get out. But if it runs, I want to be on it. So I want to play this very much from the long side. And as we've been talking about for a while now, that's what I've been doing. I've been adding to my portfolio for several months, particularly since we got this move above the moving averages back in late November. And I've been adding last week. I bought some more stocks today, just topping up. It's not like great wholesale buying, because it's been that process of like buying into strength for several months now. So it's just continuing to add to the the portfolio when the right setups appear. So it's not just go out and buy anything, it's wait for the right setups, buy the stock which meet the risk reward criteria that I like to look for. That said, I also kicked a stock out of my portfolio this week. One that just I used the time stop that I use sometimes. So it hadn't hit its stop loss as such, but it had been traveling sideways below its entry level for the 60-day period, 60 trading day period that I use. Wasn't making headway, so it's been moved on, and other stocks can come in and take its place. Also interesting to consider that there's still plenty of negativity and disbelief that this rally is taking place. And you look around internet sites and like some of the YouTube channels, which I'll pass through and just see what they're talking about. There's every thumbnail is there's a crash coming. It's like, well, I don't know, maybe there is, but at the moment it's not the case. And if you say it month in, month out, year in, year out, you're going to get one right eventually. But it's that's the sort of sentiment that we're seeing at the moment. I don't know that everyone's waiting for a crash, but I think there's general just disbelief that the stock market could be rising when you look at the headlines. Consumer sentiment remains at around about recessionary levels, and I guess a lot of that's to do with the news feed that we keep hearing about in the headlines, cost of living crisis, interest rates, and so on. So there's a lot of things to keep people looking on the negative side, but the market's telling us something else. The money, as I can see it over the last 3-4 months, the money is repositioning into stocks, and I think the path of least resistance is to follow the money flow. If the money's going in, well, that tends to be what I'll do as well. I'll tend to follow the money flow. And look, in my experience, going with the flow is generally more profitable than trying to swim against it. Being a contrarian against a strong upward momentum market, it just tends not to work out so well. Sometimes the bears get it right and they'll nail the top and you get a fall. More often than not, trends continue higher. They might pause and consolidate, but they generally head higher. That's why I say path of least resistance. That said, not buying anything. I'm hesitant to chase the stocks which have run really hard, which are really getting stretched above their moving averages. I'd hold them, and I am holding some stocks which have run really hard. I'm not looking to sell my stocks which have run really hard. I just don't want to go out and add to them or buy other stocks which have run really, really hard. My preference is to look for those which we're seeing fresh breakouts, or we're seeing rallies off the moving averages. I'm going to show you a couple of stocks later on which are meeting that criteria. And risk is something that we always need to manage. So I want to trade the setups. I want to trade the stocks that stack up from that risk reward perspective. And then, as always, when my stocks are running, it's using those wide trailing stops. And when we do get those larger pullbacks, so wide stops just give me the best chance of seeing off what could be temporary weakness and staying on trends for as long as possible. Now, if you're getting some value from this, please hit that like button. Really helps a lot. Also leave a short comment, just, hey, thanks for the video. YouTube just shows other people then when they see you're engaging. So it helps the channel a lot when you do that. Hit that subscribe button if you haven't already. That's just the subscribe for the YouTube channel, not the strategy session, of course. And now I'm going to move on to the small ords in a sec. We're going to look at commodities, have a good look at gold, and a couple of stocks I want to show you. But of course, that wraps up the free section for this week. If you're not a strategy session member, there's a link below. Click that. Doesn't cost you much. It's such an inexpensive way to, like, I've been doing this for 3 decades, and you get to sit with me, talk with me through the Q&A if you want, and it costs you like a cup of coffee. So look, think about doing that if you're not already a strategy session member. Okay, well, having said that, I think we'll go to the small ordinaries.